Do you think an emergency fund is enough to protect you? What if I told you it's not even close? Most people think saving a few months of expenses is all they need. But a single unexpected event, sudden illness, a layoff, a family crisis can wipe out years of savings in an instant. Imagine losing your job and your health insurance in the same week. It happens more than you think. In fact, medical debt is the #1 cause of bankruptcy in the United States. Your financial safety net is about so much more than just cash in the bank. It's the invisible armor that protects you and your family from life's worst-case scenarios. Stick around, because in the next 10 minutes, we're going to build that armor step by step. Welcome to Episode 9 of our Financial Freedom series. Today, we're moving beyond basic savings and tackling the bigger picture, your complete financial safety net. This isn't just about having money for a rainy day. It's about building a fortress that can withstand a hurricane. So, what exactly is this safety net made of? It's a combination of 4 key things: your savings, the right insurance, different ways to make money, and a solid plan for when things go wrong. It's the difference between a minor setback and a total financial disaster. Without it, your entire financial future is built on shaky ground. Are you ready to make yours unbreakable? Let's break down the core pillars of your financial fortress. The first, and arguably the most critical, is health insurance. You might feel healthy now, but an accident or a sudden diagnosis can happen to anyone. Without good health coverage, a single hospital stay can cost tens or even hundreds of thousands of dollars. Millions of families have been financially ruined by medical bills. Is your current plan enough to protect you from that? It's a question you need to answer before you're in an emergency room. Don't let a health crisis become a financial catastrophe. The second pillar is something many people overlook: disability insurance. Think about it. What is your single biggest asset? It's not your house, your car, or your savings. It's your ability to earn an income. Over your lifetime, that's worth millions of dollars. But what happens if you get sick or injured and can't work for months or even years? That's where disability insurance comes in. It replaces a portion of your income so you can still pay your bills and support your family. Your paycheck is the engine of your financial life. Disability insurance is the backup generator that keeps the lights on when the main engine fails. Next up, pillar number 3, a job loss plan. We all know the job market can be unpredictable. Layoffs can happen to even the best employees. So, what's your plan if you suddenly lose your primary source of income? A true job loss plan is more than just an emergency fund. Yes, you need to have 3 to 6 months' worth of essential living expenses saved up. That's non-negotiable. But you also need a strategy. Who are the first 5 people you would call in your network? Is your resume updated right now? What skills could you brush up on to make yourself more marketable? Don't wait until you're in a panic. Having a clear, actionable plan gives you control and confidence when you need it most. Pillar number 4 is life insurance, and this one is crucial if you have people who depend on your income. If you have a spouse, children, or even aging parents who rely on you financially, what would happen to them if you were no longer around? Life insurance provides a tax-free lump sum of money to your loved ones. It can pay off the mortgage, cover daily living expenses, and fund your children's education. It's not for you, it's for them. It's your way of taking care of your family, even if you can't be there. If you have dependents, this isn't optional. It's a responsibility. The final pillar might surprise you because it's not about money or insurance directly. It's about having your basic legal documents in order. This means having a will, checking your beneficiary designations, and setting up a power of attorney. A will ensures your assets go to the people you want them to. Beneficiary designations on your retirement accounts and life insurance policies are critical. They often override what's in your will, so make sure they're up to date. A power of attorney allows someone you trust to make financial and medical decisions for you if you become unable to. Getting these documents in place costs a little time and money now. but it can save your family an incredible amount of stress, time, and money later. It's the ultimate act of organization and care for your loved ones. Now, I know what some of you might be thinking. Insurance feels like you're just paying for something you hope you never have to use. And you're right. But that's the entire point. You don't buy car insurance to pay for a new tire. You buy it in case you get into a major accident that could cost you everything. The purpose of insurance isn't to cover small, manageable inconveniences. It's to transfer the risk of catastrophic, life-altering events away from you and onto a company that can handle it. It protects your savings, your assets, and your entire financial future from being wiped out by one unlucky break. It's a necessary expense for protecting your wealth. So, how do you start building this safety net step by step without getting overwhelmed? First, if you haven't already, build a small savings buffer. Aim for $1,000. This is your mini emergency fund that keeps you from going into debt over a small surprise expense. While you work on the bigger pieces, it gives you breathing room. Second, schedule a full review of all your insurance policies. Health, disability, life, auto, home. Do you have enough coverage? Are the deductibles too high? Are you paying for coverage you don't need? Call your HR department or your insurance agent and ask them to walk you through it. Understand what you're paying for. This single step can be the most important financial decision you make all year. Third, formalize your job loss plan. Calculate exactly how much money you need for 3 to 6 months of essential expenses. Then, open a separate high-yield savings account and start funding it automatically with every paycheck. While you're saving, update your resume and your LinkedIn profile. Make a list of contacts and companies you'd reach out to. Practice your what I do pitch. Be prepared, not scared. Fourth, start developing a backup skill. What is something you're good at or interested in that could potentially earn you money on the side? It could be anything from graphic design, writing, or tutoring to handyman work or dog walking. You don't need to start a full-blown side hustle tomorrow. Just start learning and practicing. Having a backup income stream, even a small one, is an incredibly powerful part of your safety net. It builds both your confidence and your bank account. Finally, with all these other layers in place, focus on growing that emergency fund from a small buffer to a full 3 to 6 months worth of expenses. This is the final, thickest layer of your safety net. It's the cash that gives you the freedom to make smart decisions, not desperate ones when a crisis hits. It allows you to handle a job loss, a medical bill, or a major home repair without derailing your entire life. Building this safety net isn't the most exciting part of personal finance. It's not about picking stocks or getting rich quick. It's the foundational work. It's the boring stuff that lets you sleep at night. Your safety net is your first and best defense against the chaos and uncertainty of life. It's what allows you to take calculated risks to build real wealth, knowing that you and your family are protected if things go wrong. Thanks for watching. Taking these steps will put you light years ahead of most people. If this was helpful, make sure to subscribe so you don't miss the rest of our 30-part series on building true financial freedom. See you in the next video.